to do a recording. Now, during the week,
Okay, better.
how was your week? First of all, how was your week? How was the trading week?
My trading week, I lost, win, but my drawdown, I was unable to take it back yesterday because of the good I took yesterday. But I missed a lot of opportunity when I go back to our previous class and do some back testing. That on Thursday night after my streak loss. So
Like,
I figured some of my error and wish I started correcting it by on Friday.
how did you manage to go into a losing streak?
Sorry?
Like, which trade and which trade? Like, how did you enter a losing streak? Which trade brought you into a losing streak?
Okay. Like the goal I took, although the bias was right, but my stop loss took me out. After the trade took me out, it now went to my direction. The
Uh,
same thing with the EU. It took me out and started to go to my went to my direction.
okay, but you figured out your
Then
mistake.
the GU, we were wrong because that one is yes. When we had the class that day, so I just figured out where I made the mistake. It was my mistake, Sha.
Yeah, okay. Then it's nice, it's good. So I saw you guys in the group talking about structure. So I was like, okay, when I find time, because basically, my mentorship are in sets. Your set is different from other people's, and I have to be managing time. So, and then I also have exams, even though just try to manage everything. So basically, today I'm going to be talking about structure, liquidity, and point of interest. It's going to be very brief, but I'll try and make sure it's very, very insightful. So if you pay attention to a lot of people are trading structure, liquidity, and then point of interest. So I'll talk about what structure is, I'll talk about what liquidity is, and then I'll talk about point of interest. This time around, the liquidity we're talking about is only one. And this time around, the point of interest we're going to be talking about are only two, and the structure is only one. So this concept I want to talk about with you is basically a concept that you don't have any business to do with my personal concept, which is SLK. If you're focusing on it, you're focusing on it, and it's very, very simple, except if you want to stress yourself. It's very, very simple. So basically, the basic market structure is the basic market structure says that if the market is in an uptrend, it's going to be creating higher highs and higher lows, which is higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. And when the market break the previous higher low created, the market has what? Giving us a market structure shift. And then the market will start creating lower high, lower low, lower high, lower low, lower high, lower low. And in an uptrend, anytime a new higher high is created, what do we have? A break of structure, right? And anytime a new high is created, we also have what? A break of structure. But when the market comes and break a higher low, this one, then at that point we'll say we'll have a change of character or what? A market structure shift. Meaning the market has changed from an uptrend to what? A downtrend. The market has changed from an uptrend to a downtrend. Now, when you're talking about structure, this is all what you want. Market breaking higher highs and higher lows, then you know the direction that the market is moving towards. You know where the market is likely going to be going to. Now, if the market break a previous higher low, then you start looking for sells. Now, how does the market work when you come to structure, liquidity, and point of interest? The structure we're talking about is not just the higher high, higher low right now. We are talking about um double break of structure. Yes, we are focusing on what? Double break of structure. Double break of structure. Break of structure. Now, for you to see you want to trade, um, for you to see you want to trade this particular concept, you need to have a double break of structure. What does double break of structure means? It means, for example, there are two types. If the market is uptrending like this, breaking higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. the market start coming down and do something like this, then this can count as double break of structure. Why? The market break a structure below here, and the market also break a structure below here. This is what we call double break of structure. Then that is when you can trade and look for a sell or a buy. Meaning, for you to have a valid direction you are going towards, if you are trading this concept, you need to have a double break of structure. Not on the same, it can be on the same side, like this one, and it can be on different sides, the major break of structure and this minor break of structure, just like this. This is what we call double break of structure. That's the first thing you need to have. Then, secondly, you're talking about liquidity. Like I said, it's very, very simple and you're going to get the best out of it. Secondly, we're talking about what? Liquidity. Now, the liquidity you are going to be focusing on is just one, and it's called what? Inducement. Nothing else. And we've already discussed inducement. Inducement is what? The first pullback after a break of structure. The first pullback after a break of structure. So, since liquidity is the first pullback after a break of structure, now when the market comes, for example, you have the market downtrending, then the market breaks like this. Let's say the market did something like this and then break. If the market break like this, then what do we have? The market has given us what? Double break of structure. The market has broken this high and then this high. Then if the market pull back after this double break of structure and then go up again, what do we have right there? We have what? An inducement. So you see, the first criteria to SLP basically is a double break of structure. Then the second criteria is inducement. That's just basically SL. And then the P here now is point of interest. And the point of interest you're using are two. You're using an order block
Breaker block.
or a breaker block. But from my concept the other time, I've already taught breaker block, right?
Yes.
I've taught breaker block. I've taught order block also. Now, what is an order block? What's a breaker block? Another block is just an engulfing candle. That's what another block is. Another block is an engulfing candle. For you to have an A plus order block, you need to have a fair value gap, but it's not compulsory that it must sweep liquidity. But it's necessary. It's necessary that okay, you need to have it's necessary. Things that are necessary are likely not compulsory. All you need is an engulfing candle, and a breaker block is an engulfing candle that failed. Now, if you basically want to trade it like this, then that's how it is. That's how simple it works. If you want to get it, this is the simplest thing: the structure, the liquidity, and the point of interest. So if you're evaluating, you need to be evaluating the overall market structure. Yes, and you can do it on any time frame. So basically, you see most of them trading it. They don't even do a bias, and that's it. They hardly even do a bias. And for them to get a bias is going to be what? Very, very difficult. But the first thing you need to get is a double break of structure. I don't trade it. I traded actually before. I say she was on chat. Okay, so I'll show you. I used to do it before, but later on, development, studying of the chart, I stopped. I just one thing I just get. So now, how you basically trade it now is when the market comes, for me, how I study it is I look forward to direction. Now, I look now. Normal USB ne fa type A kenan ko? Amma normal USB ne. Kawai na BlackBerry ake ce mai a da. Ba shi na BlackBerry ba? All right then. So if you see now, if you pay attention to like what the market is doing, how I do my own out of that time is I pay attention to higher time frame, rejection blocks, order blocks, breaker blocks, fair value gaps. I don't know if you are with me. Liquidity sweep, order block, breaker block, fair value gap, rejection block, and liquidity sweeps. So whenever I have any of those ones happen, then I can quickly scale to the lower time frame, 15 minutes, 5 minutes, 30 minutes, and then I'll look for a double break of structure. Then I'll look for my liquidity and what? My order block. That's how I do it. I don't know how well I can find it. It's been almost 2 years since last I traded it very well, but I will try to see what I can do. I'll try to see what I can do. Now, also, there are some scenarios. I'll explain something before I go into the chart. There are some scenarios in the market that what the market will do is, for example, let's use a breaker block as an example. Just a breaker block right here. If you have a breaker block or an order block right here, an order block, I'll tell you the inefficiency and why I prefer my concept over almost everything people trade. Yeah. But if you see like this, the market will not create liquidity, but the market will be sluggishly pushing to a zone. I trade this type of thing. I've not explained it to you guys. The market will not create liquidity, but the market will keep sluggishly pushing to your POI, small, coming up, small. Then the market is definitely going to respect that zone and then quickly give us a drop. You get this one. Now, what I do is on the 4-hour time frame, I pay attention to zones that the market is going to give me rejection, and then I look for my point of interest and trade. I don't know how well we can see it, but we are going to try. Now, let's say this is the 4-hour time frame, and then this was there's a breaker block, and then the market took out liquidity, external liquidity as confirmation also. Now, I want you guys to also put this thing at the back of your mind. This particular thing is not a liquidity sweep, this is a break of structure. But you guys should be this. If you are trading structure, you should know what a liquidity sweep is and what a break of structure is, right? But then, regardless of the sweep of liquidity and anything, market tap on this breaker block and give this rejection. This is a breaker block. Why is this a breaker block? Look at this. This is a breaker block. An A plus breaker block. This is an A plus breaker block because it has fair value gap above here and it has across. So it's acting as another block before, but it failed due to this aggressive move. And then market create liquidity very close to it. And then market use it to sell to external low. So the market need to come back and take this external low while selling because the market has taken out what? Internal liquidity. So immediately you start selling and you catch the trade here. Don't move. No comment, no fear. The market will have to come down and take out this zone. The same thing. Now, when the market came and tag on this, you quickly switch to the lower time frame. When you switch to the lower time frame, you come to like let's say 15. This is the time frame that you can easily. Oh my God. This is the time frame that you can easily try and catch your SLP move. You can quickly catch your move right here. And then you look for a double break of structure. Look for a double break of structure that the market is doing. Now, while identifying your double break of structure, like I said, you need to be very, very wise. While identifying your double break of structure, you need to be very, very wise. You need to be very, very wise in the sense that the market has come into your zone. Your double break of structure is.
What is on the go?
What did you say?
No, sorry.
All right, it's cool. So you see, some people ask me what strategy do I trade with? I trade SLK. I'm teaching something different today. So you see, market has stopped now. You start looking for what you're looking for. Now, let's say you want to use this first one, this first thing, because this is the first time the market came into it, right?
Yeah.
And then market came. But then let me use this one to explain. This is 15 minutes. Let me use this one to explain the buy. Let me use this one to explain the buy structure. So you can see this inducement right here, right? Now, one of the reasons I will tell, because I told you I will tell you the downside. Well, the reason I stopped trading this thing is because if I was actually trading my concept right here, I would take this buy from this zone because this is an order block and this is an A plus order block. Am I correct?
Yes.
And it has this imbalance, right? And the market came. And what happened is it's only after the market has tapped on this zone that the market gave us that particular zone. And the market still came back to take out this external liquidity. Right here. Market came back to take out this external liquidity. Right. Then the market came after taking out the external liquidity, the market still try again to make sure okay that it dropped to that zone. Now the market break below this low, which is a break of structure, and also give us a small break below here. Then that's when you now start looking for your structural liquidity and point of interest. You look out for your inducement, look out for your point of interest for you to sell. So the inefficiency of this move is what brought me to like sometimes this happened. And I was like, I need to do something different. I need to do something different. But you guys are interested in SLP. I've already blended it into my concept. That's why I said, okay, let me just come and give you the highlights. SLP is very efficient but the practice of SLP is very different because it's not a mechanical concept. It's a static concept. It's dynamic. So, but SLK is mechanical. It's going to give you the highlight of where to place your stop loss, where to put your take profit, why you are taking this trade. But then the explanation of why you are taking a trade on SLP is also very good. People are very profitable, making crazy amounts of money with it, but it's more difficult. It's very, very more difficult, right? Let's look at the 30 minutes chart now. It's more difficult than SLK. Let's see. A zone like this. Another block that failed. I use SLP whenever I'm checking for all these zones for possible sells. All right, then let's quickly just go to the higher time frame. Let's do the SLP. Now, watch. Let's start from like, where should we start from? Where should we start from? I'll break the entire market down quickly. Now, what you're paying attention to is, for me, when I was doing it, I pay attention to the higher time frame. This is USDJPY. I'm paying attention to the higher time frame. How am I paying attention to the higher time frame? I look forward to my point of interest on the higher time frame, my liquidity on the higher time frame, my stop loss placement on the higher time frame, and then I continue. Now, look at this first zone. If you pay attention, there's already a double breakup structure here. This is a breakup structure, right? And then this is a breakup structure. If you are not clear about it, we can go to the 1 hour time frame, and then I'll show you the breakup structure. I have to go back. Right. This is a breakup structure right here. Now, this is a breakup structure, this is a breakup structure. So what you do is you now look for your what? Your inducement, and then you look for your point of interest closest to that inducement. Now, the rules are the same for SLP. Point of interest. Now, kill them. What are my rules for entry, save? I can't even say them. Does anyone know which pair is this? This is USDJPY. Tell me my rules for entry now, guy. The breakup structure, yeah. The first
Yeah,
pullback after the breakup
yes,
structure.
this meant the first
Yeah.
pullback.
All right. Yeah. So now, if you pay attention to this, look at the breakup structure 1 and 2. SLP required 2 breakup structure. You can see the first one, you can see the second one. Now, after the breakup structure, you identify your liquidity. Now, pay attention to something. This liquidity was the first one that was created. The market came. Is the liquidity a valid engineered liquidity? You pick up your gun box, drag from here to the high. Yeah, it's a valid liquidity because this is where it stopped, and then the market pulled back to like 50%. So it's a valid liquidity. Then you now look for your POI closest to liquidity. This time around, you're not looking for the key level closest to liquidity. What are you looking for? The POI closest to this liquidity. Well, if you're looking at the POI, you're looking at a breaker block and an order block. Now, this time around, you don't have a breaker block. You pay attention to an order block. So let me come to like the 2 hour, so we can quickly get the point of interest. All right, this is where we are talking about. Now, this is the order block. This is the order block right here. Now, this is the order block. Now, there is a rule for order block that says if the wick of the order block is bigger than the body of the order block, you use the what? The body. But if the body is bigger than the wick, you use the entire candle. So this time around, the wick is bigger than the body. You use the body like this. Then you place your stop loss above the candle high. Then you trade down, right? Then this is your first trade. Then you'll be selling this zone. Now, basically, this RR is not a good one. If the order block is too big for you, you can refine it on the lower time frame. Go to the lower time frame and look for an order block. Don't refine it into a breaker block on the lower time frame. If it's an order block on the higher time frame, you're refining it to an order block on the lower time frame. Let's try the 30 minutes as our last result. Let me show you. Right. This is an order block. There's another block. Let me show you. I cannot teach other blocks right now. Now this is an order block. Then I'll sell from here. My stop loss just at the high of this market almost took me out, and then I will sell to like this external low. Then I'll continue the trade. Now, when the market came very close to taking out my external liquidity. Remember, if you are confident enough, you know that okay, when the market take out internal liquidity, where is it going to next? External liquidity. Now the market is already coming down, and then the market created another inducement right here. And then you're looking for the POI that is closest to the inducement also. This time around, you now be trading with this breaker block right here. And then you put your stop loss above the breaker block testing. then you now sell. Why? Because this is just a continuation of the other sell that is already playing out. So you are now continuing that sell, and then you are now selling the same sell to the downside. Then still on USD JPY, you keep scaling to the higher time frame, changing multiple time frames, trying to understand, okay, what's the market doing and why is the market doing what it's doing? Then you start what? Entering. Now, this is an external liquidity from the higher time frame. Look at it. Then the market took out this external liquidity. Immediately market sweep. Remember, if you are trading structural liquidity and point of interest, you must take note of sweeps and breaks. I said, if it's a break of structure, know it's a break of structure. If it's sweep of liquidity, know it's a sweep of liquidity. Sweep of liquidity is when the market take out liquidity and rejects. Now, basically, if it's me, from this rejection, and I have this here. Do you remember Friday GBP USD? Is it not something like this?
Yes.
That's exactly what happened. Market took out liquidity and gave this formation. Let me check and I'll come back quickly. Look, the market is doing the same thing. I don't even know. It's not hard. Actually, it's not because I'm profitable, but it's not hard to be. See, look at the trade here. It's still there. Market took out liquidity and gave the rejection. The same thing. See, you need to pay attention to each and every bit of where liquidity is on the higher time frame. The same thing that happened on this USDJPY, right? Am I using a different USDJPY? Is this one? The same thing that happened. So immediately the market gives this rejection, you scale to the lower time frame and look for an entry. But right now, I'm not interested in that. Now, the market came up and gave us a break of structure on the 4 hour. Then I will confirm that, okay, the bullish move has started. I've not confirmed from here, but I can trade here. I can correctly trade here. Let me drop to the 1 hour time frame and let's look for another structure around that zone. How the market was pushing off. Remember your rules and put them at the back of your head. Put them inside your head. Put them inside your head. I've seen a trade, but I don't know if the market tags. Why? Because the market gave us one break of structure here. No, this is break of structure, and this is a major break of structure with a minor break of structure, giving us what? Two break of structures in the 1 hour, telling me that okay, we are bullish. Now, this is a what? This is an order block. This is where my trade is going to come from, but the market did not tag. Now, you missed an entry here. Your liquidity is right here, and then you missed an entry. Now, can you see how random SLP looks? Now, why it's random is maybe I didn't get the best person to teach me, sincerely speaking. But it being random is why I was like, okay, bro. I made money with it. I passed a 25K account with it. I was like, okay, bro, let me just let me change. So then again, if you pay attention, the market came, broke this high. We're already bullish, right? Now we already have double break of structure, one here, one here. Now after the double break of structure, market create liquidity right here, and then we'll continue the buy from where a breaker block that is just here. So how they mark their breaker block is quite interesting. You use the body of the candle high. Now the most valid breaker block is going to be this one. You know why, right? This one. But then the one closest to the liquidity is this one, the low probability one. But this one is the high probability breaker block. This one is low probability, right? That's how it's a breaker block. Then you enter this trade from here also, and then you're still going to continue the buy to the upside. You're still going to continue the buy to the upside. Then that's how you keep chasing where the market is going to the lower time frame. Right now, this is also an order block right here that we're expecting the market to hold price. This place is an order block. Now the market break it. After the market break this order block quickly, you can scale to the 30 minutes time frame. You see, one of the interesting thing is that my SLE concept came from SLP. So that's when I found out when the market breaks a 4 hour high, how I quickly manipulate and find an entry and then just join the trade. Then can you see a quick trade inside the breaker block? This is the higher time frame breaker block. Look at a quick trade inside the higher time frame breaker block. Now, what is this black candle? Tell me what this black candle is. I'm listening to you.
Block that fail.
This black candle, this one, not this one from the higher time frame. This blue one, this black one.
It's other block.
Thank you very much. It's an order block. And if the wick is bigger than the body, we use what? The body, right?
Yeah.
You use the body.
Yeah.
Then you're going to be using just the body. Here, I'll use it to the low because I use it to place my stop loss. Then I'll also continue the buy. This liquidity, this. Then inside that zone, I look for an entry and then I'll continue the buy. So SLP, maybe because of my practice and everything, it has been making a lot of sense. Then you now come to the 4 hour time frame again. When you come to the 4 hour time frame, you are monitoring what is happening jejely. You are monitoring what is happening, and so that you'll be able to know that, okay, are you still going up, or you start looking for opportunities to come down. But since the market has bounced off of this breaker block, you should know that, okay, the market is coming for the entire high right here. But then you come again, drop to the 1 hour time frame. You keep looking for buys, but just know, no matter how much the market is going to push, there's what I call exhaustion. Remember, I used to call it on my Telegram saying, I would tell you, okay, the market can give us exhaustion. But this time around, the market came, give us the liquidity right here. The market gave us a beautiful liquidity, not just the liquidity, but have a breaker block. Then now you were trying to buy, then the market hit your stop loss. Immediately after the market hit your stop loss, you're not supposed to be sad or you are supposed to be rushing trades. No. What you're supposed to do is to go to the higher time frame. Look for, okay, I was looking for buy like this. The market took me out. Quickly go to the higher time frame. Try to look for a reason why the market took you out. Okay, the market was coming down for a higher time frame inducement. Market take out higher time frame inducement right here. After taking it out, market enter a fair value gap. Remember, like I said, I'm looking forward to market on the higher time frame, taking out liquidities, entering higher time frame fair value gaps, entering higher time frame order blocks, higher time frame breaker blocks, and then I'll look for my SLP inside that zone. It has to be, it's easier to spot when the market has moved, but hard to spot when the market is moving. Actually, it's not hard for me. It's not hard for me. There's one guy that said something on TikTok. So you see, market took out this inducement, and then you know that since the market has taken out internal liquidity, the market will be coming for this high. Then quickly you go back to the lower time frame, 30 minutes, 1 hour, any time frame. Then you continue looking for your entries, right? Continue looking for your entries. Now you come, you start scanning again. Let's continue. You start scanning for your entries again. Now, look at this, look at this, look at the exact thing we are looking for. Double break of structure. One should be a major break of structure from the side, like this. I traded this one, that's why I could remember. Double break of structure, one from the side and one from the side the market is moving. Then the market came, gives you the inducement below here, and then this A plus other block, your stop loss below the other block. I took this trade. Then you buy from here again, right? And then you're targeting the external liquidity. Market came to the external liquidity. Now, how do you continue the buys, right? Look at the continuation buy right here. The market came again here. I also took this one, took out liquidity, and the market came from the body. Why? Because the wick is longer than the body. Then you continue the buy from that same zone again. I'm coming from that same zone. I took these two trades. Why I'm using this is because it's a pair that I trade. It's a pair that I trade. So I know how it moves very well. I've been trading USDJPY for like since I started trading. So then you kept on targeting. The next thing is the market came. You are still looking for a continuation buy, give you a new inducement, and you're looking for the liquidity closest, the breaker block closest to your inducement. You use this one. Now your normal target should be the external liquidity of the high, which is right here. And you can see a beautiful short-term trade that the market just came here, tag you in. I didn't even see the move. I thought it hit SL. This was when I just marked it out. Now, if you are too greedy off of this move, then the market is going to what? Come back and take you out. But you can see it. You are targeting this high. If you said break even, market took you out. But remember, I said something. Whenever the market hits a breaker block, right? Whenever the market tags on a breaker block, it becomes liquidity for the other block. Have I said something like this before?
Yes.
I've always said it. The mitigation of a breaker block is always liquidity for the other block, except in few cases. So this is your low now that you used to enter. It's going to become liquidity. You just have to be security conscious. Then I don't have a valid order block here. Maybe when I go to the 2 hour or the 1 hour, I can say valid order block. Oh my God, I'm behind though. We can't see the entire price action. Yeah, beautiful. Now coming to the 2 hour time frame, it's not also very clear. But let me check the 1 hour. I want to see an order block. What's calling an order block? An engulfing candle. It's just an engulfing candle, a valid engulfing candle. That's what another block is. So you need to see an engulfing candle. All right, we are not going to be using this engulfing candle. You see, the wick is longer than the body. Then I'll start from this to the low. Now, one thing I always talk about is the stop loss. That's the stop loss has to cover the entire candle. Then you enter from the high of this. The stop loss is going to be extremely big, and then 23 pips or more. Then this line I drew is the higher time frame of our target. Then you target this high, right? Then you target this high. This is just a 1:4.9. It's a very, very bad trade. A very, very bad trade. You come to the 4 hour, when the market reach your 4 hour target, okay, the market breaks structure. Remember, whenever the market breaks structure, you see the mitigation of a broker block is the liquidity for the other block. Yeah. So whenever the market breaks structure, you pay attention. Why? Because a break of structure is meaning the market has taken out transactional liquidity. Remember, transactional liquidity. So basically, the market can retrace. So you start watching out for retracement. Meaning, if anytime the market give a 4 hour break of structure, as far as the market did not break aggressively to give a breaker block, pay attention. Let me give you guys a hint. This is a 4 hour high, for example, and the market is in an uptrend like this. Now, let's say the market wants to break this high, for example. There are two things. If the market breaks this high aggressively, then the market will use this as a breaker block to continue quickly to the upside. But whenever the market give you a normal break of structure, let's use it as an example like this, and then the market give you a normal break of structure, then you know a pullback is going to set in. Just know a pullback is going to set in, right? A pullback is going to set in. So immediately you see this break of structure, since it's not aggressive and you can see the market tags and sells a little, then you know that there's going to be a pullback. This time around, you pay attention to higher time frame inducement. That's why a lot of us used to hit SL. I've seen this thing happen severally. It's not because I'm making money from the market. I'm telling you what's happening. Because see, if the market comes to the higher time frame and take out a 4 hour break of structure happen, the market is going to pull back. So if you have a 15-minute structure to the upside, it's going to fail. It's not gold, it's USDJPY. It's going to fail. And the reason it's going to fail is because the market needs to take out a 4 hour time frame inducement before the buy continues. Sometimes a daily inducement. So at that point, you need to be looking for a higher time frame entry, not a lower time frame entry. And that's why at this point, you now start looking for a protected zone. Now, look at USDJPY on the 4 hour chart. A 4 hour major break of structure has happened. Yes, a 4 hour major break of structure has happened. What are you going to be doing? You're going to be looking for a sell. You're not going to be looking for buys again. But me, I don't counter trade. I'll wait for the market to do the complete pullback. Then I'll continue. If you know me, you know me. I'll wait. I have 7 pairs I trade. I'll go back to my normal pair. GBP, JPY, maybe something else. Then pay attention to all the move up here. It's a trend line liquidity. But look at this. A sweep, a break, and an inducement like this. The market came, did everything, came into this QM, the same structure we've been teaching. Boom. And then the buy started. So whenever a 4 hour break of structure has happened, I'm focusing on the protected zone where the buy is going to start again. Because you can't expect a 15-minute buy to continue. From here, it's a continuation buy until the market take out the high. Yes. But then if the high has been taken up, the market need to pull back at least it's going to pull back to the next protected zone before the buy continues. This is how structure works. Then you can start your buy here. This is the major buy. Same goes to this one. There is a major buy right here. Right? You can see there is a major buy right here where it kicks in and where it started from. Can you see it? The major buy. Oh, same goes to this one again. There is a major buy. The sweep of liquidity. This is what this guy. Okay, sorry. This place where this one started from. There's a major buy right here. Let's go to the 1 hour and I'll show you. Now, this is what DAX take advantage of. I attended DAX class, and that's what DAX take advantage of. It takes advantage of wherever a move is going to start from. And that's, like I said, this is where I highlighted. You can see it. So wherever a move is going to start, that's why I call it origin in my classes. That's why I told you don't need SLP. Why you don't need SLP is because I've already said everything. I just said it in form of something else. You can see the way it started again. The sweep, the break, the structural liquidity, and it started. Now, I called it origin in my classes. And that's why it's called the origin of a move. The origin of a move is always a protected zone. The origin of any. So if you see this thing on the middle of the chart, you should run away, right? So the origin of a move is always going to start in form of a protected zone, and anything is looking like that, right? So you can see it. There's the same thing, and then the pullback started. Now, this thing that happened on this, you now start going to the lower time frame and do the same thing we did here. Keep looking for buy on the lower time frame until the market take out this high. If it breaks in form of a break of structure, then you wait for the market to give you exhaustion and then the buy starts. How did the buy start? Now you're going to be looking for the next protected zone. Now the next protected zone was this, and then we'll be placing our limit order, and then the market came and disappointed us. This is an order block for us to buy. Immediately after disappointing us, we are going to reclaim the profit lost. Yeah. Why? Because this became a breaker block, and this became liquidity for the breaker block. If you go to the lower time frame, it's going to be very clear. I'm just explaining to another time frame because we have 3 minutes left before the live end, before the class end. Then you sell start again. Immediately you see this, you are not bullish anymore, because anytime a protected zone is disrespected, the trend has changed, right? Then you start looking for yourself from here. Then after selling this, you're going to sell this again. This is an 4-hour order block. You sell now, sell again. After selling, you're not going to be buying. Anything that is going to happen, you're not going to be buying. Market came on the 4-hour, you are going to be selling because the market is already bearish. Take out higher time frame inducement. After taking out higher time frame inducement, it gives us a double break of structure. Even on the 4-hour, came up, take out this inducement, came into this order block, and then sell again, drops. Market came, did not take out the external liquidity, but since I'm bearish, my target is this external liquidity. I won't be scared, I'll still look for sell again. Then this one will now serve as the inducement, and then we'll now use this breaker block at first. We're not using this, we're using this breaker block at first. Then boom, the market will come, taps and sells. So wherever it is, if you're paying attention to structure, the live is, or wherever it's more difficult than SLK. It's far more difficult than SLK. So for you to master SLP, you hit more stop losses. It takes time because it's a dynamic concept that it's going to be difficult. But I passed my first 25K account with this. I have my record till day. I passed my first 25K account with this. I received my first payout, which is like $1,404 with this concept. But later on, meeting the people I met, adding more knowledge and so many things, I blend 4 concepts to find out to use my concept. Everything just made sense and profitability came in. Crazy profitability. So this is how SLP looks. All you need is a double break of structure, first pullback after break of structure, then POI process. You say, which prop firm is it, bro? I use Good Funded. What's the name of the strategy? This is SLP. So but my I use Good Funded, I use Aqua Funded, Blue Guardian, Funded Next, and Alpha Capital. That's why I trade. When is the next live? I don't have time for coming live. When sometimes few classes when I teach, I do it live. Few classes, not all the classes, just few classes. I do it live. Yeah, so this is how structure looks like. I will send you guys the record. You can join me live on TikTok now. I'll be live for like 15 more minutes before I go. I'll be live for 15 more minutes. So is this MSNR? It's not MSNR, but it's like it's not MSNR, but my concept is blended with like little part of MSNR to make sense a lot. To make sense a lot. Why don't you trade gold? I trade gold. Gold is my first pair.